Good afternoon, everybody. Hope you're doing well. Let's dive right into the daily market recap. Couple playbook trades to review, starting with CoreWeave. CoreWeave had a catalyst today, earnings, gap down pretty significantly, about 8% or so, and then put in an opening drive trade. So I was focused a bit on Google on this one, or today, but this one turned out to be a really nice playbook trade. So it's very textbook pre-market structure. You have trending pre-market structure. We talked about in the pre-market a possible frontside short around this 100. Didn't quite get there. The RSI was bearish on this push higher. As you can see, the RSI here getting overbought and more overbought than it was previously at these spots here. So really, just trending pretty straightforward. And then into the open, you get this break of the pre-market structure low. So you could use this bounce here as kind of that front side look, even though it is in the pre-market. It's a very, similar kind of format. But in terms of like what's a textbook playbook trade here, this break of the pre-market structure is the entry that we would typically look for. So once you've broke this, it even tried the trap and then failed to say you're like, okay, this is a bit of a direct move. I want to be a little bit patient here and see how it reacts. This would have given you a couple spots where it even back test twice after breaking back below before turning lower and then just easily trending the rest of the day. Excuse me. So I thought that was very good today for review. APP was also good. We had an alert fire off on this. Again, I was looking to keep it simple today and missed this one, but it was a key level here at 619. This is the low from September 25th. It's also acted as a key level of both support and resistance for price in this range. So going into today, there was some news yesterday about insider selling, a director selling some shares. So you have that going on. And really just kind of a cascade here at the 619. So sold directly off the open. What's interesting about this one is, technically we have very low volume. And then once the open hits, you see that sell into 619. Once 619 breaks, boom, look at the volume, starts to expand very quickly. So if you're watching a technical trade, especially like a breakdown, this is a textbook example of what you want to see to have confidence that this can go much further and not trap, right? When you see that volume building, that means people are participating here and you get this follow through of a move. So really nice continuation lower. And then I thought SPX was, just calling it out. I thought it was interesting when you combine it with the Gamma playbook, but this 6807 has been our key level. We've talked a lot about 6800, 7 points, obviously not a big difference, but to be precise, 6807 is this high from October 24th, and we've really respected it well over the last couple of sessions, and in particular today. We had 1, 2, 3, 4, 5, 6 tests at this spot almost perfectly to the point. Before pushing higher. And, this was a bit of a, tricky price action, period of tricky price action. Ultimately, though, we held, and, this is one of those setups where I think at this stage, you're kind of hands off. And as you heard us talk through on stream today, excuse me, weren't looking to do too much. Then we see this, hold and start to turn and then get slapped down very quickly. That can be, tempting to want to get short and take a breakdown of the 6807. What I thought was interesting in terms of the Gamma landscape today was around the time that this had held up on the last 6807 test, there was actually some long dealer Gamma that showed up at 6840, and excuse me, that was not previously there before. So while this area in between was full of selling and a little bit choppy, once we got through this 6825 level, which is kind of the last batch of sellers, we easily pushed higher, as you can see, and we called that out on stream. I didn't capitalize on that as a trade, but I hope some of you did. That ended up playing out almost perfectly. So really nice move. And then there was also a pretty decent size selling around 6850, which we also talked about being a point at which would be hard to get through that. And you can look at what price did, right? We weren't able to really hold any kind of any levels above 6850, and we ultimately just closed at a technical level of 6843. So, technicals are really driving the market here. We're seeing a very, very precise technical environment where levels are being respected, and the overall trend is supported. So big picture, we're just supporting the overall trend here. As you can see, not too much else to say other than that. I think we need to continue to just monitor the trend. And, we're in a bull market. As much as people are coming out of the woodwork with, when anytime we get any kind of dip and then they quickly disappear, about bubbles and all this, that, and the other, it's good to understand where the narrative is, but it's also sort of more so noise, if nothing else, because even if it is a bubble, it could be a bubble in the making, and that could be another year and a half before the bubble pops, right? And are you just gonna sit around and try to short every chance you get all on the way? Like, no, like we just take what the market gives you day by day. Some days are easier, some weeks are easier, some are harder, and our job is to identify what's working in the market right now and do our best to align with those types of trades. And I think we're doing a good job adapting right now, as you saw some of the trades that we put on today, and yesterday. And then for me, and just on that note in particular, for me, especially with the account challenge, you saw me over the last 2 days take a little bit different entries than you might normally see. And that's because of adapting. I'm looking for setups that have a strong narrative, or at least some kind of narrative, and not getting too caught up in just straight technical price action. And Netflix yesterday, you saw me catch off the open up this dip and rip. So you saw me look for that better risk reward paired with the narrative to get involved with this trade, and this ended up playing out again today. And then Google as well. So like looking at this 291 breakout, very big breakout level, and instead of waiting for it, you saw me enter off this turn today. Now, it's important to understand that just because this was my entry doesn't make it the high. It's not every trade needs to be high probability. There's a relationship between probability and risk reward, right? And it's not. I think sometimes we tend to have like this kind of desire to find a perfect system, and the reality is it doesn't matter, or there isn't one. And having a healthy relationship, or understanding the relationship between these two things, is what's more important. The most important thing you can do is everything that you decide is defined and repeatable. The reason for that is so that you're able to track it and if it's making money or not. And what I mean is on Google, for example, 291, if we break out over this 291.59, that's a higher, and it breaks through and just starts to run. It's a very high probability trade. The risk reward may not be as good depending on the timing, but an entry here, but the probability is very, very skewed in most cases with those types of breakouts. And in this case, the big picture getting in a little bit earlier, it's still a defined entry, right? We sweep the pre-market lows, failed breakdown, that's defined. We have 288 as a reference level and 286 just below it. So you're risking about $1, right? And if Google ends up running up for that breakout, you have a much stronger entry. Now the risk reward is extremely positive here, as you can see and imagine, right? But the probability isn't quite as high, right? Because you're not through the key spot. The odds or the probability that this could get caught and chop and get range bound are elevated, right? So that's what you're risking is the balance between risk reward and probability. There's not like a right or wrong ratio. Obviously you want to have a good risk reward ratio, but it's just really, are you making money at the end of the day? Some setups tend to naturally have a very high risk reward, or 1-to-1 risk reward with very high probability. It just depends on the setup. So the overarching message is just be flexible as a trader, and the most important thing is every decision that you make sure it's one that is calculated and defined, so that you can track it and know if it's working or not. If you can't track what you're doing, you'll just be shooting from the hip and have no idea whether or not that it's working or making money in the end, right? There's too many uncontrolled variables. If you're just, I'm going to buy here or sell there, and you can't tag or distinguish why you're doing that. All right, so a little bit of a rant I didn't expect to go on, but anyways, hopefully you find that valuable. As far as the summary for the market, we talked about just pretty much looking at much of the same here. If 68.43 can hold, I'd expect a move towards 68.80. Below 68.07, I think we can start to pull back into 67.60 first. So this is the previous all-time high, which I don't know why that level moved, but it's 67.64, previous all-time high. I would expect to see that test again if we can't manage to hold 6,800. And then you have this gap fill that could, be something to watch if we fail there. So there could be a really nice setup to the downside there. And then also just, we're looking at continuation higher if not. So that's the overall market. As for active positions, holding Netflix here, I rolled into next week's 1200 calls. We'll see, basically looking for a run up into the split on Friday. We'll see if this can, continue to catch a bid. It looks fantastic. I wouldn't mind having a little bit more time than just an extra week though. So what I'm kind of thinking here is if we can gap up and run into this 1157, I'll look to take profits on that if the premiums expand, and then maybe even buy like December or January. I might even go out to January and buy like 1250 or something like that. So we'll just have to see, but really love the way Netflix is acting. Google, and this is part of the watch list for tomorrow as well. Wouldn't say I was necessarily a day early in terms of, being aligned with the right name. But as far as a big breakout over all-time highs, this is an example, one that just didn't go during the session fully. It tried a couple times and it held up great on dips, ended up paying us very nicely today. But it just didn't have that, big breakout over the highs just yet. So my opinion, or just kind of like my lean of what I think is going to happen here, which, we'll just react to what does happen. I think when this plays out like this, you usually don't get the same chance to buy the breakout. A lot of times a setup like this is going to just gap up over, and then you're kind of looking for that back test entry, or it just is a little bit trickier usually when they do this. So it's better when it just rips through during the session and you can, manage more size and such. So it looks fantastic, looks great. I think it's set up for a move to 300 as long as the market cooperates, obviously. So this is looking really, really good. Everything else is pretty much status quo. BABA, ARM did not have good days. Let me double check on PayPal. PayPal held up, so it's just doing its thing. Nothing really to say there. And then Tesla also put in another little trap of this trend line on the daily. Because I'm not quite technically an inside day, but basically consolidation day on the daily here. So just, continuing to hold this. I'm expecting to see a bigger move in Tesla when people are least expecting it, probably in the form of some news or something. So right now, just hanging tight with that. All right, watch list for tomorrow. We talked about Google. We talked about Netflix. Let's talk about PLTR. So PLTR, inside day today, very constructive price action overall. Big recovery off this 169. Over 195.70, targets 200. So watching 200 calls. LMND, we've got a really nice looking base here to break out of over 80. This also has squeeze potential with over 20. I think it's about 20% short float on this name. So we could get a push up to this 100, 96 to 100 level if we can clear this 80. So this would be a continuation following earnings. Sellers are kind of caught off sides here. There's really, if you're short this chart, you're in pretty nervous, right? So this is a very good setup going into tomorrow for the upside. Apple doing, showing a lot of strength, really. It's been relatively strong for several sessions. Look at what it's done compared to when the market pulled back over 4%, right? And now it just releases to the upside today and has a very strong close, just below 277. I think Apple is on its way for a move into 300, and a breakout over 277 could spark that tomorrow. All right. Eli Lilly, healthcare is on fire right now. This is an area of the market we need to continue to pay attention to. This is just one time framing higher. Really impressive. Now, what's interesting about this setup at this point in time is the 1000 psych level. So this is, broken through all-time highs, extremely strong, a lot of breadth in the candles, a lot of range. It's looking great. Now you're, through highs and testing a big psych level, a triple digit, I'm sorry, 4 digits, psych level here, entering possibly into the thousands for the first time. So this is a pretty big psych level, pretty big deal. And a lot of people tend to think, oh, it's up too much, I'm going to wait. And then they just keep chasing it higher. And that's sort of what you're seeing here, right? On the day like this, where, you pull back, get a dip, and that just gets bought right back up. This in here starts to create chasing. Now, at some point, that can result in a nice reversion trade back to the downside. But a very important thing when trying to time reversion is to look at the slope of the stock and how it's moving. Right now, the stock is moving extremely consistently. Like the range of these candles, this slope is very constant, meaning it's, if you imagine like a rubber band, this is just being, pulled slowly. It's not accelerating quickly. The range of each session is relatively the same, which is very constructive and very bullish. And so there's a couple ways that the reasons why that's important, because if you're looking to trade this, the breakout over 1,000 is worth trading, because you can trade the upside into that rubber band stretching, right? What if this breaks 1,000 and people start to chase it? There's nothing stopping it from running 10, 20, 30 points, possibly even running like 50 or 60 before then reverting and kind of snapping back to the mean a little bit. So this is something to think about with this setup. So going into tomorrow, it's all about 1,000. It may be tricky. It might break and just rip right through. And I think that upside is the main focus for now. And there's two things that I would wait for before I would consider taking a reversion trade. It would be one, that happens and it breaks out and just starts to really rapidly squeeze. Then I'd start to be looking for that reversal back to the mean. Or two, you don't get that, but you fail the one-time framing higher. So right now, this is just one-time and framing higher. If you break the prior day low, like 964, and close below it, then you have a bit of a better setup and risk reward back into the range. So that's Eli Lilly, a little lesson on some reversion concepts there. And we got a couple more. So Spotify, nice looking setup here on the daily. It's pushing up into this channel, put in a big failed breakdown at 615 on the higher time frame. I would look for a magnet trade here. So over 640 today's highs, there's clear resistance at 650. So this could just be a magnet right into 650. All right, and then GS banks continue to be strong. These are hard to trade in my opinion, but also another magnet play to 825 if it can manage to hold this 810, 807 area. And I think that's what we've got. Nope, a couple more. Swing trade watch, Uber, same as yesterday, nothing's changed. Just watching this 95. And then Meta is much more nuanced of a swing idea for me. We talked about it on Sunday, so my thesis is the same. Basically, the risk reward has now become very good off of 621. You've had 2 consecutive days of testing and trapping 621. Not a lot of follow through to the upside yet, but the risk reward is very, very good. And I think that this can, even if it's a dead cat bounce or relief bounce, be a really simple play up to 650 before it heads lower. And possibly if it doesn't head lower, you get that squeeze kind of price action where you push up into 660, possibly 680 before getting rejected. So I think that this is one that for maybe a couple weeks out could be a really good play to just position size as long as 621 is holding. And that wraps us up. So hopefully you found that helpful and I feel prepared for tomorrow. If you have any questions or other chart requests, just let me know. Otherwise, have a great rest of your night. See you guys.